Wall Street's hiding 7 wealth accelerators that could change your life forever. Welcome to Prosperity Pulse Guide, your trusted pulse on financial freedom. If you are between 18 and 50, grinding through life's uncertainties in the US, bills piling up, dreams deferred, that quiet take for security, this video is your wake-up call. Today, we pierce the veil of elite secrecy. Wall Street thrives on your ignorance. Peddling high-fee funds while hoarding true accelerators. These aren't get-rich-quick schemes. They're timeless levers backed by decades of market data and behavioral finance principles designed for everyday Americans like you. Imagine transforming that gnawing fear of retirement into unshakable confidence. Stick with me, we'll uncover them one by one with actionable steps to ignite your prosperity. Let's dive into the video and start from Accelerator number 1, the asymmetric bet mindset. Our first accelerator is the asymmetric bet mindset, a principle Warren Buffett lives by but brokers bury. Picture this: you're 25, staring at student debt, feeling trapped like so many millennials and Gen Zers. Wall Street pushes symmetric gambles, 50-50 stock picks with equal upside and downside, but asymmetric bets? They offer 10x rewards for minimal risk. Think early Tesla shares or Bitcoin in 2015, small capital, explosive returns. Emotionally, this hits home. Remember the pang when a loved one struggled financially? Shift that pain into power. Start by allocating 10% of your portfolio to high-conviction moonshot investments, ETFs like ARK for innovation or small-cap value funds. Data from Renaissance Technologies shows asymmetric strategies outperform by 300% over decades. Track your bets in a simple Excel: entry price, thesis, exit. Rules: this isn't gambling. It's calculated courage. Mastering this rewires your brain from scarcity to abundance, turning life's heartaches into wealth-building fuel. Transitioning seamlessly, this mindset demands discipline, which leads us to our next accelerator, the velocity of capital. Accelerator number 2, capital velocity mastery. Wall Street loves idle cash in their pockets. Capital velocity. It's churning your money faster than a high-frequency trader. For a 35-year-old dad in Ohio, skipping that third coffee means deploying $5 daily into dividend aristocrats like Procter & Gamble, compounding at 8-10 annually. Feel the emotion, that warmth of providing for your family's future, erasing the regret of past splurges. Studies from Vanguard reveal velocity-driven portfolios beat buy and hold by 2.5% yearly. Action step: audit expenses weekly via Mint or YNAB. Reinvest dividends immediately. No parking in low-yield savings. Sell underperformers. Quarterly. Rotate into momentum plays like NVDA during AI surges. Velocity isn't speed for speed's sake. It's momentum propelling you toward legacy wealth, healing the wounds of financial procrastination. This flow of capital naturally amplifies through leverage. Our third accelerator, accelerator number 3, smart leverage laddering hidden in plain sight. Laddered leverage. Banks hawk 20% credit card APRs while using 0.5% Fed funds for billions. You can too ethically. A 40-year-old teacher in Texas ladders debt, 0% intro. Balance transfers, then Helix at 6%, fueling real estate. The heart touch. Imagine the tears of joy buying your first home outright, breaking generational poverty. NYU Stern research shows 3-to-1 leverage boosts returns 15% with hedged risks. Start small, use 1-2x margin on blue chips via interactive brokers or REITs like Vink. Ladder maturities short-term for liquidity, long for growth. Pair with stops at 10% drawdown. This accelerator doesn't burden. It elevates, turning leverage from a curse into a catapult for dreams deferred. Building on leverage's power, we pivot to tax alpha, the silent killer of returns. Accelerator number 4, tax alpha harvesting. Wall Street's fees steal 1-2 yearly. Taxes devour 2030. Tax alpha harvesting flips this. Harvest losses annually, sell losers. By similar ETF swash sale rule savvy. For a 28-year-old in California, high taxes sting. Offset with this. Emotional core. Reclaim what's yours, honoring the sacrifices of immigrant parents or bootstrapped upbringing. Fidelity data. Harvesting adds 1.2% annual returns. Steps. Max Roth IRA 7,000 year. Backdoor if over income limits. Use SHAS for triple tax-free growth. Donate appreciated stock to avoid cap gains in down markets. Harvest aggressively, turn pain into perpetual gains. This isn't evasion. It's optimization, forging financial sovereignty from fiscal frustration. Harvesting feeds into our fifth, behavioral edge compounding. Accelerator number 5, Behavior alleged refinement humans lose 3-5 yearly to biases FOMO. Anchoring, Wall Street exploits this via Huft. Refine your edge. Journal trades, score on a 1 to 10 discipline rubric. Heartstrings, overcome the isolation of solo investing, like that 45-year-old regretting 2008 panic sells. Dalbar studies, disciplined investors beat markets by 4%. Daily ritual, 5-minute meditation pre-market. Review via TradingView, avoid recency bias, backtest ideas on Portfolio Visualizer. Build a mastermind group. On Discord, this accelerator heals emotional scars, compounding calm into capital. If this pulse check is accelerating your wealth journey, hit subscribe now to Prosperity Pulse Guide. Get weekly insights straight to your feed. Your future self will thank you. Seamlessly, behavioral mastery unlocks Network Alpha. Accelerator number 6. Network Alpha amplification quants hoard alpha from connections. You can too join masterminds like EO or Local Reyes, a 22-year-old entrepreneur in Florida networks into syndications yielding 20% IRR. Touch the soul. Forge bonds that echo family ties, turning loneliness into lifelines. Harvard research. Strong networks boost wealth 15x action. LinkedIn outreach 10-week to CFAs. Host free webinars. Co-invest via platforms like Yield Street. Value first. Share your pulse insights. Networks don't just inform. They transform isolation into invincible alliances. Finally, the crown jewel, antifragile portfolio design. Accelerator number 7. Antifragile Portfolio Architecture. Nassim Taleb's Antifragile thrives on chaos. Wall Street's Achilles heel. Barbell, 80% bonds or T-bills, 20% tail risk options for a 50-year-old nearing retirement. This weathers storms. Deep emotion. Shield your legacy from black swans like 2022's inflation heartbreak. Bridgewater data. Antifragile outpaces S&P by 5% in volatility. Build core VTI or VUXIS. Tail via TM flavored bonds and EBIT Bitcoin. Rebalance quarterly. Stress test via Monte Carlo Sims on right capital. This isn't defense. It's evolution, turning life's tempests into triumphs. I hope you liked the video. Please support us and share it with your friends and family.